the other thing I want to move on to, Steve, as well,
Sure.
is something where, let's go on to some good news, where UA managers like, Steve, this is working really well for me, this campaign. I want to really double down on this, but maybe you haven't budgeted for it. So how do you sort of deal with that?
That's another good question. Um, I guess it's at that point, depending on whether you work for a private company or a um, public company. You've got an opportunity. You need to go to financing sources and figure out how you're gonna, right, how you're gonna finance that. If you got an opportunity like that, you got to jump on it. So you either go back to your equity investors or find some kind of creative, debt financing source, right? There's a lot of people that do, AR financing, whether it's venture lenders or some of the special factoring guys like Pollen and Fast Pay and people like that. Pollen, as you know, recycles things a little faster, so uh, I tend to like them.
Do you look at credit lines from the ad networks at all?
For yeah, not from the ad. It depends on the ad network. So some of the bigger ones that are big, and we just heard they raised $115 million or something like that. I'd probably watch it. I'd probably let that go. But I listen to it all the time. I listen to the industry news, and again, this is somewhere where the UA team can really help finance. Yeah, if you hear somebody might be in trouble as a company, you got to let us know because maybe we want to cut down their line of credit a little bit, right?
I see. Because we
Yeah.
put together, obviously, I've been working closely with Paulin in terms of just helping them with some of this. And this is in collaboration with Paulin. But, what Martin has talked about is using those credit lines because it's theoretically free. Do you have a different stance on this, Stephen? Please, like, if you do, like, I'd love to hear it. That's what got me
Oh
interested.
yeah. I mean, we don't use. I was thinking about from the revenue side, people paying us. I don't use. I mean, we get 30 days from the vendors, but then I just get our financing sources elsewhere, like a Pollen or a bank.
Oh, interesting. Okay.
Yeah,
Because
because
we put
vendors
together
only do
this.
30 days, right?
Yeah, that's very interesting to hear because we put together, well, Paulin did this capital stack where it says, all right, how to efficiently fund your UA campaigns. And it's like add network credit lines. So I'll read the list out and you tell me where you agree, disagree. Add network credit lines, number one, cash at bank, obviously, credit cards, and then lines of credit like a Paulin where you can get AR financing. And then obviously the next one is VC funding if you really wanted to raise more money. So what do you think, Steve?
I'm biased to the VC funding right now, but uh, so that'll be among the most expensive, though. A lot of times, you know, efficiently deployed the pollens and stuff will be the next traditional bank lines if you can get them, and that's the biggest problem. They can be pretty cheap, relatively inexpensive compared to the other sources, but you have to be pretty large, right? So you got to be a 20 million, $30 million company with venture backers before a bank will give you a good credit line. Credit cards, I just that's risky. Yeah, I mean, I don't. Yeah, it's pretty expensive.
I see. I like it. This is great. I'm glad you said this. All right, let's end with this, Steve. So I'm a founder, been doing this, been running pretty much UA, finance, all this stuff. What kind of tips do you have of when a gaming company should hire a CFO?
It's a good question again. I would say I think people wait too long to hire a CFO because I think a lot of people think you have to have a full-time CFO, but I think more and more you'll see these part-time CFO guys around. And I've seen them at a couple other game companies. So if you can find somebody, I would say you probably don't have to do a part-time person until really you've got some consistent revenues coming in, because it's then at that point where you got to start managing the revenue and the expenses. Before that, you're just trying to get traction. So you don't need. It's too early.
Yeah. I like that. You have a revenue number that, founders should try
Yeah,
to
it's
aim
funny. I was
for?
thinking about that. So say when you get to like 20,000 DAU, maybe they're doing like 10-cent ARPDAU or something like that. Yeah, so you're doing 2,000 a day, right? 2,000 a day in revenues, 60,000 a month. Yeah, then go get a good part-time CFO. That doesn't mean you don't have to get a lower level, like bookkeeper or controller before that, But I would say you start out with that sort of a accountant bookkeeper type. Then when you get up to that certain level, you can bring in like a part-time CFO. Then at like, let's say 5 to 10 million, then you might want to start looking at the CFO. And if you're going to start interacting with venture funds and maybe corporate people, then you may want to do it a little earlier than later. But if you can run on your own, then you probably don't need it till about 10 million.
I like it. Thanks for those real numbers too. It sort of is helpful, like it doesn't have to be
Yeah,
tried and true, but it's like, okay, it's a gauge of, am I close?
right. Is it 100 million or
Yeah,
is it
right.
like 100,000?
Right. There's a big
Right.
difference there.
Yeah.
Steve, anything I missed that you want to make sure we hit upon?
No, I just, again, be a good partner. It's a team game.
I love it.